In this video, I am going to explain what is a partnership and what are the important concepts used in the partnership. So in the whole video, I will be going to explain the meaning of the partnership, nature of partnership, characteristics of the partnership, risk associated with mutual agency and what is mutual agency, what are the rights of partners, what are the basic terms and concepts, and partnership deed, termination of partnership. What is the partnership and the taxation system in the partnership? Ownership of assets of the firm. What does it mean? And at the end, I will explain what are the types of partnership. So, starting with the meaning of partnership. A partnership is an unincorporated association of two or more parties to pursue a business for profit as co-owners. General partnerships are governed by the provincial law and are common for small retail and service-based business. For example, physicians, lawyers, and accountants. As per the Partnership Act, partnership is the relationship between persons who have agreed to share the profit of the business carried on by all or any of them acting for all. So next, I'm just going to explain what are the nature of partnership. Nature of partnership is divided into two parts. There are two views. The first is accounting point of view and the second one is legal point of view. As per the accounting point of view, it is a separate entity from its partners. Ac- Accounting is totally completed and done from this point of view. What does it mean? It means what are the transactions that we will do in accounting, maybe the journal entries, trial balance of profit and loss count, or financial statements. So that will be totally based upon this concept. For example, Rex and John, they have established the partnership firm. The name of the partnership firm is RJ Partnership. So RJ Partnership is different from Mr. Rex and Mr. John. So this is known as separate entity concept. But this separate entity concept we will use only for recording the transactions. But on the other side, legal point of view says it is not a separate legal entity from its partner. For example, firm's debt can be paid from the private sectors of the partners. If the firm is not able to pay its liabilities under general partnership, what does it mean? It means that the partner will be held responsible for all the debts of the company. It means there will be unlimited liability for all the partners in the partnership firm. Now, what are the features and characteristics of partnership? At least there should be two or more persons to establish a partnership. And the agreement can be written or maybe oral. Both will be valid. And the partnership should be established according to the law for the lawful businesses. And as for the profit sharing ratio, it is compulsory to share the profit, but not compulsory to share the losses. So that will happen in the limited partnership that I will discuss in the next coming slides. What is the meaning of risk associated with the mutual agency? So before explaining the risk, what is the mutual agency? It is the partners are the principal as well as the agents both. Business can be carried on by all or any of them. So in this case, all the partners are the principal. They are a boss and also all the partners are employees. Means you can say agent of each others. They make orders and give directions to each other according to the requirement and need which is required in the business. Under the mutual agency law of general partnership, one partner has the power to commit the partnership to any contract within the scope of the business. For example, if one partner have done something, commitment or some act on the basis of the partnership and scope of the business, and the consequences are very harsh and intolerable, the rest of the partners will be held responsible for the act which is done by that partner. So this is known as the risk associated with the mutual agency. Now, what are the different rights of the partners? Every partner has the right to participate in the business management and be consulted about the affair of the business. And this, the partners have the right to inspect the books of accounts and have a copy of it. Every partner has a right to share the profit loss with other in the agreed ratios. Partners have right not to allow admissions of any new partner. For this one, consent of the all partners is required. For example, if there are 50 partners, 48 partners are agreed upon the new partner admission, and even like one partner or two partners, they are not agree. In spite of the majority, that 48 candidates, 48 members or partners, they are agreed. There is a total majority. In spite of that, the admission is not possible. So that's why the consent of all partners is must. What are the basic terms and concepts? As per accounting point of view, the partnership firm is separated from its partner that we know. For example, RJ partnership firm is there, and Rex and John they are the two partners. Let's say Rex invested money, and the money is invested by the one partner, and interest on the capital will be expenditure of the firm, and that interest which is received by the Rex will be added in their personal income tax return. John receives salary or commission will be considered as expenses of the firm as well, and the interest received on drawing by any partner will be the income of the firm. It means if, for example, John withdraws some money for the personal use, maybe $2,000, right? So in this case, the money they have withdraw, the money that is belong to the firm, the money that John has borrowed, the interest on that money, which is known as interest on time, they will have to pay to the partnership firm. So this will be considered as income for the firm. So what is the partnership deed? Partnership comes into existence by oral or a written agreement. The written agreement is known as partnership deed or memorandum of partnership. It is legal document signed by all partners containing various terms, conditions and clauses of partnership. While it should be in writing to protect the partners in the event of disagreement or dissolution of the partners of the business. The contract is binding even if it is only expressed orally. It means not written. What is a partnership deed and what it contains? So, the name of the partners should be in the partnership deed. Then, name and address of the business, capital contribution, and interest on capital, interest on drawing, what is the profit sharing ratio, what will be the interest in case if the companies take loan, what will be the remuneration of the partners, what are the rights and duties of the partners will be included in the partnership deed, and apart from that, what is the withdrawal procedure, and if there is a dispute, what is the dispute resolution or dispute provisions. So all these things that need to be added in the partnership deed. Termination of partnership. The life of the partnership is a very limited. Partnership can be terminated on the event of death of any partner, bankruptcy, at will. It means at the desire of a partner. If one partner want to leave the organization, leave the firm, can leave. In that case, the partnership will be terminated. Any event taking away the ability of an partner to enter a contract ends the partnership. It means if anyone or any partner is have not ability or unable to be a partner in the firm, in that case there will be the termination of the partnership. Now, partnership and taxation system. Partnership has the same tax status as the proprietorship. The profit or loss for the partnership is allocated to the partners according to the partnership agreement and is included for determining the taxation or taxable profit of each partner's tax return. Allocation of partnership profit or loss is done every year, whether or not cash is distributed to the partners. Now, what is the meaning of ownership of assets of firm? Partnership assets are owned jointly by all partners. For example, any investment by a partner becomes the joint property of all the partners, and partners have a claim on partnership assets based upon the balances in their capital account. So, what are the different types of partnership? The first one is the general partnership, second is the limited partnership. When the general partnership cannot pay its debts, the creditors can apply their claim to all personal assets of the partners, such as their homes, for example. And this is considered as unlimited liability for the partnership debt. And this is just like the sole proprietorship. The person who is running the business will be held responsible for the all debts of the business. Exactly the same principle and rule is applicable in case of general partnership. But the limitation of the general partnership can be overcome by the limited partnership. What is that? At least one partner must be the general partner who assume the unlimited liability for the debts of the partnership. The limited partners have no active role and no personal liability beyond the amount they invest in the partnership. For example, the one partner has invested $10,000 in the business and will be held responsible and liable only for the 10,000, not more than 10,000. So this is known as limited partnership. Next kind of partnership is LLP, which is known as limited liability partnership. It is clear from the name itself that the liability of all partners is limited to the amount of their investment in the firm. So this kind of partnership has been created with the combination of some of the features of partnership and some of the features of a corporation. All partners in a business are limited partners and not responsible for the debt and other liabilities if someone in the business messes up. In simple word, we can say this type of partnership is designed to protect innocent partners from malpractices or negligence claims resulting from the act of another partner. It is a way for professionals to pool their resources while not being liable for other parties' negligence. LLP are common among medical professionals, lawyers, and accountants. So, what is the conclusion of this topic today? From this lecture, we have learned the different types of partnership: general partnership, limited partnership, and limited liability partnership. And what are the features of the partnership? A risk associated with the mutual agency. What are the rights of the partner and basic terms used in the partnership? We know that the partnership can be formed orally or by a written agreement.